All right, so the latest jobs report just dropped, and at first glance you might think, okay, nothing too crazy here, but if you dig just a little deeper, there's this one number, one piece of data that's kind of a big deal. It's sending a little alarm bell through the economy. So let's break it down and figure out what's really going on.
There it is, minus 120,000. That's the number that has a lot of people talking. It's how many jobs small businesses, the ones we always call the backbone of the economy, lost in just 1 month. Wow, it's a really stark figure. So the big question is, what's actually happening here? Is this just a blip on the radar, or is it a sign of some deeper trouble brewing?
Okay, so to really get what that minus 120,000 means, we've got to zoom out a bit. And when we do, the data shows something pretty surprising. It's like we're looking at two completely different job markets at the same time. It's not just one single story, it's really a tale of two economies.
And here's what that split looks like in a chart. It's pretty dramatic, right? You see small businesses way down here shedding 120,000 jobs. At the same time, bigger companies, they were still hiring. They added, a combined 90,000 jobs. But just look at the size of that loss from small businesses. It was so big that it dragged the entire private sector into the red. That's incredible.
And this wasn't just happening in, one specific industry. The cuts were all over the place. We're talking professional services, tech, manufacturing, even construction. The only real bright spot, as you can see, was in education and healthcare. So what that tells us is that the pressure small businesses are feeling, it's a really widespread thing. This isn't just some isolated problem.
So this all leads to the million-dollar question, right? Why? Why are small businesses hitting the brakes so hard while bigger companies are still cruising along, still hiring? Well, according to the experts who put this report together, the answer really boils down to one single powerful word.
And that word is uncertainty. Neela Richardson, she's the chief economist at ADP. She puts her finger right on it. She says employers are basically dealing with a double whammy. On one hand, you've got consumers who are getting a little cautious with their money, and on the other, you have this whole macroeconomic environment that's just really hard to predict. And here's the thing, that feeling of uncertainty, it doesn't hit all businesses the same way.
So let's really dig into why that is. Small businesses are just uniquely vulnerable. They feel the pinch from nervous customers and rising prices almost instantly. They don't have these huge cash reserves like a big corporation does, so they can't just ride out a slow quarter. And this is a really important point. They can't easily absorb the shock when government policy suddenly changes.
And speaking of those policy shifts, the analysis points to one thing in particular that's creating a lot of this uncertainty for businesses: tariffs.
Okay, quick refresher, just so we're all on the same page here. What's a tariff? It's basically just a tax on goods that are imported from another country. The company that imports those goods pays the tax. But of course, that cost doesn't just vanish into thin air. It almost always gets passed along either to other businesses down the supply chain or, directly to us, the consumers, as higher prices.
Now here's something a lot of people get wrong about tariffs. Research fellow Sean Higgins points this out really well. We tend to think tariffs are put on finished products, right? Like a new TV or a car coming from overseas. But that's not really the whole picture. A lot of the time, these tariffs are actually on the raw materials, the basic ingredients that American companies need to make their own products right here.
And that sets off a kind of chain reaction. It's pretty easy to follow. Step 1, a tariff gets slapped on an imported raw material, let's say steel. Step 2, all of a sudden, it's more expensive for a U.S. manufacturer to buy the steel it needs for its factory. So step 3, to stay in business, that factory has to find a way to cut its costs. And way too often, cutting costs means cutting jobs. You can literally draw a straight line from that policy decision all the way down to a potential job loss.
All right, so we've got a pretty clear picture here, right? Small businesses are definitely feeling the pressure. But is this just a one-off data point, or is it a sign of something bigger happening in the economy? Let's zoom back out and try to figure out what these warning signs might mean for everybody.
Now, to be fair, it's important to know that not all the data is telling the exact same story. So on one hand, you've got this ADP report we've been talking about showing a really sharp pullback. But on the other hand, you have data from the National Federation of Independent Businesses, the NFIB, and their stuff paints a different picture. Their surveys say the labor market is actually still pretty tight, and a lot of small businesses are saying their biggest problem is just finding good people to hire. So you've kind of got these two competing ideas about what's going on.
So how do you make sense of that? Which one is right? Well, Sean Higgins comes back with this really powerful analogy. He says what we might be seeing with small businesses is a classic canary in the coal mine situation. You've probably heard that phrase, right? Miners used to take canaries down into the mines with them because the birds are way more sensitive to dangerous gases. If the canaries suddenly got sick or stopped singing, the miners knew it was time to get out, fast. It was an early warning system.
And that really brings us to the core question of this whole thing. We know small businesses are more sensitive, they feel these economic shifts first. So is this big pullback in hiring just a temporary thing, a little adjustment, or are they that canary in the coal mine? Are they sending us a huge warning sign about the health of the entire economy? That's the big question this report leaves hanging in the air.